Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about the Bitcoin correction. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Now, it's a pretty brutal time in the market. We did a stream earlier where we were watching the price drop live. Right now, we're trading for just below $43,000. And I want to talk a little bit about the correction. Maybe talk about some of the emotions that people are feeling. It's just going to be probably a bit of a ramble. Okay. But anyways, the first and obvious point that we see a lot of people doing, and we've done it too here, is it's easy to compare this one to the last one, right? And I think one of the reasons is because we have seen things play out before in similar manners. Or if you take, say, a bar pattern from say here, and then just kind of shift it over, we saw that play out almost identically. And so it is natural as humans, I think, to look for patterns and to kind of try to find things that have happened before and say, well, is it possible that something like that could happen again? And are we on course for it to happen again? And of course, there are the similarities, right? Of course, there are the similarities. But we'll talk about the similarities, but then I also want to talk about the dangers of comparing, one specific move to another move and hoping that it plays out the exact same way. So to look at the similarities, the first thing we could say is, well, look, this correction over here, so the current one that we're experiencing, at least so far, is actually a tamer version of what we saw back in May, if you can believe it. Right, so far. Okay, things can change, but if you were to take a measured move from the top at 64K down to the first capitulation wick, that was about a 54% drop or so. Sometimes some exchanges it's lower, some it's not quite as bad. This one to that capitulation wick that we've seen so far is about a 39% drop. So if anything, the current correction has been a bit more tame. Now, the similarities that we've previously discussed are namely, we had sort of one little peak here, a second local peak and a downtrend, and then a third one. And then the fourth one sort of popped up and kind of broke the downtrend temporarily. And then in this correction, we sort of had the same thing, right? We had three local tops, and then the fourth one, at least temporarily, broke the downtrend. Okay. Now from there, this one broke down, and we actually had a wick that took us below the prior wick. Right? It actually took us below it. And then we actually bounced back up. And now we're sort of seeing a very similar move, right? We broke through the support we had, and we've come all the way down, right? We've come all the way down. And we are close to breaking that. And on some exchanges we have, because again, the liquidation events on various exchanges can bottom at different levels. But, on the one we have pulled up right now, you can see that liquidation event previously took us all the way down to, maybe $400 or $500 below where we currently are. So it was still a little bit further to go. But that's what we saw play out last time. So I think the argument is that if we want to be able to potentially compare this move for weeks to come to the one we saw back in the summer, then, we need to see a bounce, right? It doesn't have to be right now. We could hang out here for a little while, but if it breaks down like this, then clearly we're not doing this anymore, right? Like we're not repeating that exact same structure. And you should know that it is, of course, all of us want this to play out, right? I know everyone's familiar with Wyckoff accumulation and Wyckoff distribution. I think I heard Wyckoff accumulation and Wyckoff distribution enough times in 2021 to last me for the rest of my life. But namely, the Wyckoff distribution pattern that most people have seen up here, the Wyckoff accumulation pattern, right? You come down, you come back up, you come all the way back down, and then you come all the way down for the third and final time, and then you get your spring, right? So, you come down, you come back up, you come down, and then if we do repeat that, then we'd have to come back up later and get our spring. But we still have a bit more to prove before that's even a possibility. So the first thing we need to do is we actually need to bounce out of this range if we want to be able to compare with the summer lull. Okay, we need to bounce out of this range. I mean, we don't have to go all the way back up to, to 52K, because we probably won't make it there for quite some time. But you can see that this move over here, after the wick, the bounce ultimately took us to, just below the, this final little top, local top here before the larger bounce. Took us about 4 or 5% below that one. So if we were to look at something similar, a 5% move below that would actually take us back up to around $47,000. So I think the argument basically is, if we want to compare this move, if we want to continue to compare it to the potential summer lull, then we need to see a bounce, and we need to bounce a few $1,000s in short order, because if we don't, then we're clearly going on a different path. All right, so that's what I want to talk about. And then another thing that I think is interesting is, if you actually compare the first liquidation wick here to then the second one that retested that level, it actually occurred approximately 34 days later. And if you go look at this one that we're looking at today, it occurred approximately 32 to 33 days later. So there definitely are similarities, right? There definitely are similarities there. But, I think the main, and this is what I'm doing, right? I mean, I see the similarities. We know that they could theoretically play out, but we need to see a bounce first before we should spend too much time thinking of it as like the only possibility. Okay, because the problem is that if people constantly count on prior patterns to play out, you could get burned if you think that things have to play out exactly the same way. And if you think about it during this market cycle, think about how many people have gotten wrecked to some degree because they thought something had to play out in the exact same way as a prior cycle, right? I mean, you've seen all of the the overlaying of fractals or patterns, whatever, all the overlays. We've seen them before, and most of the time when you compare a prior cycle, they don't work out. Why? Because the market capitalization is much higher, and you have to assume for diminishing returns. I mean, right now we're still, we're still in a local area of the chart. We're not like comparing something that happened 5 years ago or 4 or 5 years ago with what's going on today. So, I mean, maybe it makes a little bit more sense in terms of we're sort of still in that range. But, my general thoughts on the market are that retail has gotten completely chewed up, right? And part of I think part of it is the idea that, the constant calls for higher prices, and, the idea that we're going to bounce tomorrow. Look, I've said before, I don't think, it's obvious now, right? It's obvious now, but I don't think we're going to have a parabolic Q1, or probably Q2 for that matter. I think we have a lot of work to do in these ranges. And we know that 2021 was mostly just sideways action between 30 and 60K. So that's what we saw in 2021. And we are continuing to test those levels, at least in the beginning part of 2022. So the primary areas to watch, and we're going to switch to a linear scale for this, and at least in terms of the whole structure of the market. So 30K is a pretty big level, okay? So I would argue that is a pretty significant level for Bitcoin. Another significant level, it's not rocket science, right, guys? It's just 30K, 40K. These are pretty obvious, obvious important levels that Bitcoin would theoretically at least respect somewhat, okay? So there's 30K, and then here's 40K, all right? So right now we are, we're playing in the sandbox between 40 and 50K. So I'll draw that line as well, just so we can see kind of where it is. So we're currently between 40 and 50K. Now, when you think about the structure of sort of the market right here, I suppose I should also draw one at 60K just to have the, just for aesthetics. So there's 60K. All right, so when we look at the overall structure of the market, we can see that 40K would be a pretty important level. Okay. And, I'm sort of the opinion at this point that a lot of retail has already left. And it's not really necessarily my opinion. It's just a fact based on the statistics on the YouTube analytics page. Like, I can just see that a lot of people have moved on to other things. Okay. And we see this all the time in crypto, right? I mean, even in the summer lull, a lot of people kind of checked out for a while and then they came back later on. You should know that retail in droves will likely not return until Bitcoin gets to a new all-time high. We've seen this many times before. So until Bitcoin gets to, say, 70K, we're most likely not going to see retail flocking in. And I've had some questions recently. People say, well, if retail doesn't come flocking in, how do we ever get to 70K? Well, just look to see what happened before. I mean, we got to 20K in 2020 without all of the 2021 retail coming in. And when I do polls to say, to ask when people join crypto, I was always very surprised to see that such a large majority of people only joined in 2021. So Bitcoin was able to reach its prior all-time high without having all of the retail from 2021. So I think it's safe to assume that it is possible for Bitcoin to reach its prior all-time high without having to have a flock of retail coming in. Okay, so it's highly likely that you will not see retail in droves return until Bitcoin gets to a new all-time high. And we've mentioned this before, that a lot of the projects that are pumping off and on over the last several months, it's more likely just money moving within the asset class rather than a horde of new investors. It's just like you shifting your money from one project to another is more than likely what's going on, not necessarily a ton of new retail money. So I would say that, certainly there is a bit of a liquidation hunt going on right now with Bitcoin, and you can tell that they were trying, a lot of people have been trying to, to have to cause this breakdown. We can go look at, you can easily go look at everyone shorting the market whenever we got to those levels. So there certainly were some efforts there. But look, it's not market manipulation. I don't really consider it market manipulation. It's just the way the market is, right? If you call it market manipulation, then you might as well call anyone buying and selling crypto market manipulation. Okay, it's just a market. It's just the way it is. When you buy Bitcoin, you're obviously wanting the price to go up. When you sell Bitcoin, you're wanting the price to go down, potentially so that you can buy it at a cheaper price later on. So I think the market manipulation narrative is getting kind of old at this point. But if for whatever reason, anytime the market dumps, everyone screams market manipulation. It's just the market, and it's just how it works, right? So 40K is a pretty important level, I would say. Below that, I imagine, if Bitcoin were to fall below 40K, I would have to imagine that at that point, there are going to be a lot of people that will just completely lose all hope, right? Because then, going back to this grind down here isn't exactly anything people really want to see. But as we showed before, that there does exist a potential theoretical scenario where we could see something like that happen. One of the times we saw something like that happen was on the stock market. And I showed this on the channel a few weeks ago, in fact, right? We saw a similar type of thing play out where we had like a local top here. We went down in the sandbox for a little while. We came back up, and when we actually went slightly higher, and then we actually came all the way back down, technically put in a new low, and then we systematically took out the prior all-time high, and then you can see what's happened ever since. Clearly, this is not going to play out the same way. And I don't mean to imply that it has to play out in the same way. This was the financial crisis, okay? So the market conditions were significantly different. And this also took place over years, right? It took place from like 2000, and then it didn't even break that and go on to new highs until 2013. But clearly, this range occurred over 395 bars, and then the amount of bars to get to a new all-time high was about 291. So let's just say 300 over 400 took about 75% of the time. So then if you're looking at Bitcoin and you're trying to gauge some type of, okay, well, what if we were to somewhat emulate it? You could say, all right, well, that's about, That's about 1,200 bars or so. So let's just suppose the next one takes it, and it was really more than 1,200, it was 1,260. Let's just suppose the next one takes us, I don't know, 900 bars, maybe a little bit more. You get the idea that I don't think Bitcoin is about to have a parabolic breakout. And that's why I've said for a number of weeks now and months that we're not going to have a parabolic Q4 2021. And that we probably still have quite a bit of work to do. So the main areas I think to watch are clearly the liquidation wick that we previously observed, right? So watch the liquidation wick, and again, it depends on the exchange. If we go look at some of the exchanges, like here, let's go see where the liquidation wick was. This one took us all the way down to 41,967. So we could even go down another $1,000 from where we currently are just to make it to the liquidation wick that we saw earlier in this downtrend. Okay, so liquidation wick, obviously 40K is a big area I think to watch. And then that brings me to another thing I wanted to show, which I think is somewhat interesting. But basically, it's the idea of looking at sort of the overall market structure from this drop over here to then this one. So if we were to draw a line at so we had this move here, but then the first pullback was at that area. Okay, so let's just go through this really quick. So we moved up, we came back, we actually found support there, and then we moved higher. And then much later on, you kick the can down the road half a year. That's where we ultimately found support, right? So then, you could look at this and say, well, if this move here is supposed to be, to emulate this one, and then we had sort of this first pullback right here at that wick, if it were to continue to emulate, then you can see how that 40K level, or even maybe, that wick was actually slightly less than 40K, like 39 to 40K level, could end up being important. If this ends up playing out like the summer lull did, okay? It's like this drop, or this sort of slow systematic bleed. If this one continues to play out like that, you can imagine how, it would just be a brutal market, right? That would be such a brutal market to just see it go grind, week after week, to just watch it grind down. And to not necessarily rip the Band-Aid off, because, honestly, that's the best thing. If we could just rip the Band-Aid off, go to whatever price it's going to go to, and then start trending higher from there. Obviously, that would be a much more ideal scenario. But that is at least one type of analysis to look at. So, I've wanted to break it down in a number of different ways. I know people are somewhat emotional. I would argue that if you are overexposed in the market and, you have too much invested, there's nothing wrong with skimming some off, even though the market's down, right? Even though the market's down, if you need to skim some off the top just to make sure that you're not, struggling to pay your rent or something, then that's not necessarily the worst decision in the world. Remember, investing is with money that you don't need tomorrow. Okay, you don't need it tomorrow. And if you wanna wait to see what the downtrend, when the downtrend is going to stop, you can always go back to these Heiken sheet candles. And look, it's just been red for a while. And this downtrend over here, from this point, we started right here, but then we had a green candle. If you just look at this, the red candles back to back to back, it was 10 weeks. It occurred over 10 weeks, okay? And realistically, you can say 11 weeks because it was 11 candles, and then maybe add a couple for 13 if you skip this green one. But so far, this one has only been about 7 weeks. So again, if we're going to emulate it, we could still see another 4 weeks of this nonsense, right? We could still see another 4 weeks of it, and that's if we emulate it. Okay, so the market is what it is, and people have always said back in earlier this year, I was taking some profits on Bitcoin, back over here, right? Back over here. For full disclosure, I did not take any over here, just to be completely honest. But I did over here, right? I did over here during this move up to the upside, and then I started DCAing again down here, and then I picked some up along the way. So this move, right? It was certainly easy to take profits on it because this is what it preceded it, right? This one, coming up after having such a long period down here, I don't think it was quite as obvious. Now, it might have been more obvious to some people, but it wasn't quite as obvious as this one was. Because on this one, it felt like we were so far ahead of schedule and everything. So now that we're coming down, if you're just running out of money, right? If you've been DCAing and you're just like, well, what do I do? I mean, it's just going to keep going down. Like you could just take a break, right? I mean, you could just say, all right, well, the downtrend has to stop eventually, and whenever it does stop, maybe you could then start DCAing again, okay? But for now, the downtrend is still very much intact. I know it's easy to look at this and call it kind of a sideways range, but you can clearly see it, based on the trajectory, based on sentiment in the market, and then based on the fact that if you look at all the extra time you're spending at these lower levels, you could certainly argue that this is very much still a downtrend, just like this one was. Even though, if you flip it over to go back and look at, say, normal candles, you could easily say, well, this was just sideways action, right? But when you use these Heiken sheet candles, which I think do a pretty good job of tracking, the sentiment that people are feeling, because we're actually spending more and more time at these lower prices, and it takes into account the prior weekly candle, you can see that this was a systematic downtrend until it wasn't. This is going to be a systematic downtrend until it's not. And so if you need to just sit out of the market until we actually see a shift back up to the upside, there's nothing wrong with that. All right, I don't really see there's anything wrong with that. So, again, to summarize once more, if we want to continue to compare this to the summer lull, then it is certainly possible we could go down a little bit more from here, but we would like to see a bounce at some point in the next few days. If we don't see a bounce in the next few days, then I think arguably we're doing something different than we did in the summer, and that it would probably be somewhat dangerous to continue to say that we're going to track that pattern exactly. But if we bounce, if we're looking, if in a couple days we're looking at Bitcoin and it's back up 46K, 47K, we could still be tracking it, right? We could still be tracking it. And if we are at 46, 47K in a couple days, we should remember, though, that if we do continue tracking it, it's probably just going to come right back down again, right? So like if on the daily time frame, if we do get that bounce, right? So like if on the daily time frame, if it comes back up like this and everyone starts to get super bullish again, we should just remember that we experienced the same type of emotions back over here, and it did not stop it from coming back down for a third test of the bottom, right? So it did not stop it from doing that. So that's what I'm looking for. Clearly, obviously, a lot to digest. I don't have a crystal ball. I wish I did. Hopefully you can, at least I'm helping you manage your risk in the market. If I am, make sure you subscribe to the channel, give the video a thumbs up, click the bell icon to turn on notifications, and I will see you next time. Bye.